Good evening, everyone. Time for another silver update. This is the daily chart of gold tracked against the Dow Jones Industrial Average. You can see the incredible divergence that we have right now. Gold is trading at the equivalent of 12,000 Dow. The Dow is trading at the equivalent of 1922 gold. So what's going on here? You can see that this trend channel here for a very, very long time, in fact, over the course of 3 years or so, these two tracked each other. When you have a type of inflation or potential hyperinflation, we know that anything people can buy, they're going to buy rather than keeping their money in the currency. Now, it's in the interest of the central banks to force people out of the bonds, force people into equity markets, but of course they don't want people to react and go into hard commodities. So that's why we have the manipulation that we're seeing, a tremendous crack in the gold market, and we see the same thing in the silver market. But this divergence now is only rivaled by the reverse divergence that we saw back in the summer of 2011. And if you remember, that was near the budget crisis time. We're going to have another budget crisis here coming up very soon. Now, Obama has already proposed his budget, and the Congress is probably going to sign off on that. And of course, they are going to talk about reducing entitlements. So it seems pretty clear that they intend to introduce some type of austerity. We don't know what form it's going to take, but we do know that they're going to force grandma to start eating cat food because they're going to reduce the Social Security benefits. And again, that's disingenuous to call them entitlements. Actually, Social Security is still solvent, but especially because they raised the payroll tax, reducing benefits. But it's pretty clear as they tip their hand what they intend to do, and it's pretty amazing that AARP and all the rest supported the people that they supported. But let's look at the silver chart, because we had that phenomenal breakdown here. You can see we're right at that support level. That's right there, sitting at $26. Are they going to be able to break that down, cause a technical breakdown, and have us revisit that? Oh, it's going to be about 20 bucks on the low side. Now, it's going to be fascinating to see if anybody on earth can buy silver for 20 bucks. And I don't think you're going to be able to do that. So let's look at what's going on in the physical market. I posted a chart on the blog about the potential disconnect between the physical market and the paper market. I think we're starting to see that. Before we do that, let's pull up the volume. It's very important. You can see this volume spike here. This is something that is absolutely unprecedented in history. They're using more volume of paper silver by a factor of at least threefold and potentially fivefold paper trading to run this price down. Of course, that price is not reflected in the real physical market, but again, these are just fake markets. So it's taken a tremendous amount of paper contracts. You can see the spike here is to roughly 7 million. That translates to billions and billions and billions and billions and billions of ounces of fake silver. So the bullion banks, the central banks, the money Wall Street banks, they're trading fake silver back and forth. And of course, the Bitcoin, they crashed that, ran it up very high, and then crashed it. Now, why are they doing these things? We know why they're doing what they're doing, because with them tipping their hand in Cyprus, we know that ultimately they intend to just steal all the money. Now, it's much easier to steal all the money that's in retirement accounts, that's in stock accounts, that's in bond accounts. It's literally just a keystroke or a pen stroke to change laws or to change markets, and what you thought was your money all of a sudden is their money. Uh, then again, it's much, much more difficult to seize and steal real wealth, uh, physical silver, physical gold. That's why these markets are under attack. That's why, with them tipping their hand in Cyprus, and we've seen the laws in other countries that they intend to do these types of bail-ins, and the depositors, any of them that have a brain, are going to leave only just the minimal amount to pay their bills in their bank accounts and take all the cash out, and perhaps buy physical silver and gold, maybe some bitcoins, whatever they're going to do. They're going to spend it on something other than keeping in the currency and let the financial repression eat them alive. So you can see here that we crossed into that critical level of the 25s on silver, and that's very important. Now we want to look at the junk silver. That's what we've been looking at, and some of the other silver. The first site I want to take you to is Tulving. The gold has a lot sold out, but the silver is even more impressive. You can see here that the mint boxes of Eagles are sold out. The San Francisco mint ones are sold out. The 90% bags are sold out. You can see they're buying them at spot plus $1.50. We're going to look at some others and see it's actually higher than that. 90%, 50 cent half dollars are sold out. Walking libs are sold out. We've still got some NTR bars, some NTR metals, 10 ounce, and the Year of the Snake, NTR. This is not Perth, it's NTR. Those are still available. But the Johnson Matthey 100 ounce are sold out. Golden State Mint rounds are sold out. You can still get some A-Mark rounds, but the Buffalo rounds are sold out. Now that's rare. You don't see that very often. All the Canadian mint sold out. Sunshine Mint sold out. And the boxes of the Canadian Maple Leafs, those are sold out. This 2013 Koala, that's a 1 kilo, so that's an anomaly. The sealed boxes of the Philharmonics are sold out. There's some America the Beautiful coins, but again, we still haven't seen the 2013 on those. The antelopes are sold out. The bisons are sold out. The more eagles sold out. And so this is one of the worst pictures you've ever seen on Tulving. Not a lot of people are going to say, well, they're not willing to sell at a loss. Well, but that would be true except for the fact that if you look at the buy prices, and you can see the buy prices are all above spot, and some of them are very, very much higher than spot. So let's go over to APMEX, and you can see there's only 2 bags left of the 1,000 face, and there's 5 bags left of the 500 face. Now at 22,000, you're talking about $31 or so. I'm not going to bring up the calculator and do that, but you're talking almost $4 to $5 above spot for junk silver. And you can see here's actually their buy price, and that comes to roughly $28.50 to $29. So that is $3.50 to $4 above spot. I'm sorry, $2.50 to $3 above spot on their buy price. So it looks like they're trying to make the disconnect happen, and who knows what's behind that. If we go over to eBay, you can do the calculations. I went ahead and set this to search for the highest, so I could see the biggest lots that are going. And these big lots, you've got 160 ounces for $44.20, and then on down, ranging anywhere from $29 to $32. So you're talking about roughly $3 to $5 above spot that junk silver is going for. So there's no question that this is a fake market. They're pulling out all the stops. Again, I believe the reason why they're pulling out all the stops at this point is because they've tipped their hand, and what they intend to do is to take people's bank accounts, to take people's retirements, and they want to discourage people from investing in the only protection that exists against that theft, and that's going to be physical silver, physical gold, and a few Bitcoins. So those are the markets they're crushing and destroying. And if you've watched the action in the Bitcoin recently, and if you remember the action in silver in 2011, a lot of people say, well, why would they do that? Well, the reason why they do that is because a falling price discourages investment. The Bitcoin is very important because, as you've seen, as it rose to $266 on the high, now it's collapsed and corrected all the way down to 50. It's about at 110 now. But you've seen on my other blog, if you follow that, the interest. High prices bring in interest. So they know what they're doing. They understand that if we penetrate this price here, this 49, 47, roughly nearly $50 price, if silver penetrates that price on the upside and continues to go, that will draw in an enormous amount of interest. The public responds more than anything else to rising prices, and especially new highs. They know this, and that's why you see this volume here. This is fake silver being sold, and they're actually willing, apparently, to create a market disconnect. So let's jump over to some questions here. We'll start off with Dave606. A correction or a bear market? With gold in the 1400s and silver fighting to stay above $25, just when does a correction turn into a bear market? Silver and gold have been correcting down for 2 years. Doesn't that qualify to be termed a bear market and not a correction in a bull market? Well, those are subjective things. Let's go over to gold, pull up the chart, and go to the weekly. We'll take this volume out here. So, is this a bear market? Well, let's draw the trend lines from the lowest one here, and then we'll ratchet them up. And based on that line, you might be able to project that gold is in a bear market. But if you're looking at this long-term trend, then you may have to actually see gold penetrate $1,000 or even $800 to safely say that gold is in a bear market. If we turned and went up from here, such as that line, then obviously there was no bear market. What are those definitions? Well, it's all subjective. So, next question, Canadian Wildlife Series, and this is from 4 Ounce. Brother John, wondering if you have seen the interesting activity in the Canadian Wildlife Series using APMEX prices. I write a grizzly selling for $48.69, the new bison and the newer antelope selling for $33.15. But look, what do you think about the moose jumping to $45.69 and the cougar jumping to $47.69? Do you think the antelope and bison right now today could be a spectacular buy? Definitely, they could be a spectacular buy. I've recommended the moose and the cougar in the past. You have to remember that relatively speaking, for the number of people in the world, there's a very, very small number of these coins being issued. I've personally followed the idea that you want to buy the oldest available semi-numismatic coin that's at a reasonably cheap price. So if you can find 2012s, you want those. 2011s are even better. because as those coins roll off and stop being available, the price jumps. You can see that here. I didn't think the moose would jump that much, but it really doesn't surprise me. So yes, it could be quite possible that the antelope and the bison are a great buy right now. Again, 33.15. That's a very large disconnect. If we're talking about $26, you're talking about $7 above spot, and that's very large disconnect. Next question from Silver Sal. Are these dots about to be connected, dear brother John F? Do you see any connection between the call to short gold, the effort to keep gold capped, and the forced sale of sovereign gold reserves? Think Cyprus. Not only do the central banks get to buy gold at a discount, but the countries whose gold is forfeited gets a low value for their metals. So that's been bandied about recently. Yes, it's quite possible that the reason that they're suppressing gold right now in such a drastic manner is that they're forcing the gold in Cyprus to go up for sale. They're going to be able to buy it at this low price. Whose gold are they going to steal next? We don't know. We know that gold is bleeding to the east in enormous quantities. Physical gold is going east in enormous quantities. The Western socialist countries, and that is the European Union, the United States, Canada, Australia somewhat, and Japan, are rapidly going bankrupt. They are all subscribers of the idea of centrally planned economies with central banks that print endless cash and use that cash to pay for deficits and spending that is above revenue. And that is the essence of socialism, or even perhaps in the case of the United States, verging on communism that we're going into. And of course, as the late Margaret Thatcher said, that socialism's great until you run out of other people's money. We're rapidly running out of other people's money. That's why we have this desperate bid to suppress the price of real assets, gold and silver. We're coming to a breaking point where they're going to have to decide whether they want to simply confiscate the wealth of savers or whether they want to hyperinflate and pay off the debts with worthless printed currency. We're coming to that point where they have to decide which way they're going to go. I'm going to stick by my earlier calls that this is actually a fake out. They run these deflationary fake outs quite often to try to chase people into bonds, chase people into stocks, chase people into some type of yield. And then, of course, as I pointed out earlier, it's just a matter of a stroke of a pen, such as happened in Cyprus, for them to confiscate whatever percentage they decide. So this is, in my opinion, possibly a last gasp, desperate move by the central banks of the world, primarily orchestrated by the Fed, to short real assets, force the people into fake assets, and then once everybody's on board, they can turn around and change the rules of the game. So it's a no-brainer to stack at these prices, even though you have to pay anywhere from $2 or $3 to $5 above spot. Yes, you can get some buffaloes here and there for around 27, but they're few and far between. No question that if you know the fundamentals, you can't lose when you stack at prices such as these. And we'll talk to you next time.